what I would actually say, and this might sound a little baffling at the start, but I'd actually say most people should avoid industrial real estate. And we'll get into some of the reasons on why industrial real estate is good. And I've got the vast majority of my net worth directly in industrial real estate, so I'm a big believer in it. But I think that there's also a very steep learning curve for someone to decide that industrial real estate is appealing, they want to get into it. It's not the same as perhaps a residential real estate investor who says, okay, well, I'm actually going to increase my portfolio, I'm going to do multifamily. There's a lot that needs to be learned, but it's not a huge leap. If someone already owns 10 houses, it's not a huge leap to go and buy a 20-unit apartment building. Still takes time. Don't want to discount that, but it's not as big of a leap as someone that owns residential real estate to all of a sudden consider going to industrial.
So today on the show, we have Chad Griffiths. Met you a couple weeks ago. Kind of hit it off. You're in industrial real estate, which I find really interesting. I always think real estate in general gets painted with like one big brush. So people who are doing like house flips or what I do or what you do, it's always just real estate, and they're really different. So I kind of wanted to get, I don't know much about industrial real estate, so wanted to learn a little bit from you, and then we'll do kind of a little bit of a debate after, multifamily versus industrial. But thanks for coming on. Can you just kind of tell us a brief summary how you got into it?
Yeah, absolutely. And thanks for having me on the show. Excited to be here. Yeah, and I agree with your point as well. It's funny that Elon Musk just put out a tweet saying that commercial real estate is melting down fast. And then he said housing values are next. And I think everybody thinks, well, commercial real estate, that's everything then. Everything's melting down. But reality, like you said, there is a lot more nuance to it in subcategories. So office, I think, is struggling, but other areas like multifamily and industrial are faring much better. So my background, got into the business in 2005, started as a broker. So I've been a broker my entire career working in industrial real estate. Started investing myself in 2014. Started with one small industrial property with my partner. And then we've since just added pretty much a property every year since. And then I talk about industrial real estate all the time. I create a bunch of content, have a podcast on it myself, and just love talking about industrial real estate. So we'll have a verbal debate and then maybe an arm wrestle later, and we'll settle who's the champ, multifamily or industrial.
Sounds good. Do you you just touched on the office thing? Do you ever like come up with ideas for what people can do for that? Is that something that you think of, spend any time thinking about?
In terms of filling rampant vacancy?
Yeah, like people are always like, oh, turn it into apartments or do this.
Yeah, and that comes up all the time, and people will say, well, let's just turn this into multifamily or apartments or hotels, and it's possible, but most buildings just aren't designed to accommodate that. The footprints are really large. There's usually one common washroom area for each floor. The HVAC isn't balanced for each individual unit. There's not balconies, so anyone that's living in one of these essentially can't go outside unless they go downstairs. So you can compare how an apartment building is built. It's just radically different than how an office building is, and it just usually takes so much money and time to retrofit it, and then there's still things that you just can't solve, like balconies. And there's just a lot of office space. So the cost of it is just usually prohibitive. And then there's outstanding things that just render it impossible to deal with.
Yeah. And when you talked about, like you're obviously a broker and an investor, how do you decide if a really good deal comes up and you want to buy it? How does that work? Does it still go to market or?
Yeah, I'd say that the majority of properties that I bought were that situation where an opportunity came up and I took a crack at it. So it's case by case. There's going to be properties that just aren't attractive to me. There's going to be properties that perhaps have a lot of vacancy, and it's not I'm not attracted to the risk that comes with that. So then those ones will go to the market. If it's a deal that's right in my wheelhouse and something I look at, I'm actively looking all the time. So yeah, I would say 9 out of 10 will go, actually even more than that, maybe 99 out of 100 will go to market, and they'll buy that odd one that does come up.
Yeah. And has your investment thesis changed over time? Like for me, when I first started looking, it was like I want the highest cap rate possible because I'm like, oh, that's extra cash flow. And now, that's not at all the case because I realized the class of building and stuff. And and the power a low cap rate can make on the value side too. But has that changed for you since from the first property to now?
I'd say it's changing almost on a weekly basis right now. I was pretty optimistic at the beginning of maybe even mid last year. I was pretty optimistic about the market, and things were just seeming to be going pretty well. The interest rate environment is not for the faint of heart right now. It's just trying to figure out where the cap is on that, how high interest rates are actually going to go. And what I think a lot of people don't realize is that the rising interest rate value has put a huge dampen on the economy as a whole and the real estate market specifically. And even multifamily and industrial, which have done quite well over the last decade or so, their values have gone down just as a result of interest rates rising. It's put upward pressure on cap rates, which anyone that has a property right now, if you were to sell, we all have paper losses, I think, right now over the last year. And just trying to pinpoint where interest rates stop and perhaps start coming down, that's the million-dollar question right now. And I think that there's a lot of opportunity. I think people that are buying right now are going to do very well in the next 5 to 10 years in any asset class because they're buying at values 20 to 40% lower than they were 2 years ago. So I think my investment thesis has gone from being very bullish to now looking at my own portfolio and realizing that the values are down considerably. And probably just that cliche pencils down for me right now until I get just a better sense of what's going to happen and having some comfort to move forward. So my strategy has always been buy somewhere in between value add and stabilized assets. So I don't necessarily want to buy a property that has one tenant in there locked in for 10 years, almost like a coupon clipper or bond, nor do I want to buy a piece of land and do a ground up development and take that risk. I'm somewhere in the middle. I like having some cash flow. I like vacant property carries a lot of risk, and that scares me. So I'm kind of in the middle. I want to have some upside where I can add some value to the asset, but I also am not a huge risk taker. So somewhere in the middle.
Yeah. I think the quote's like, you should buy when there's blood in the streets, even if it's your own. But it's very hard to do that when I think Rockefeller said that. But it's a lot harder when it's your own. And in multifamily, we've definitely seen the sellers aren't willing to accept that the cap rate may have changed. So the values haven't came down, but now your cost of capital is way up. And I think when I thought we would have seen a little bit more of this already, and I think we're just maybe seeing it when the debt starts coming up, and now their loan, when on renewal you're paying hundreds of % more in interest. I think that's when maybe that starts to kick in on the seller side.
Well, even an interesting point on that is a lot of real estate investors, the strategy is to buy a property, increase the cash flow, eventually do a cash out refinance and try to pull some equity out of there once the value goes up. I think we're actually going to see the reverse of that, where values are declining. And once you start getting to debt coverage ratios and what lenders are going to require to maintain that ratio, if values are going down and there's downward pressure on rents, there could be a scenario where people need to do cash in refinancing. And that's a scary thought for people that might be stretched a little thin. So that all kind of circles back to my strategy on I'd rather have that money available right now so that I can just maintain and not have stress of buying another property and then perhaps stretching myself too thin. I'd rather be sitting on cash right now in the event that I do need to prop up or sustain one of these, because I think the market will recover. But I think we are in a lull right now where there's blood in the streets, and some of it could be ours. So you're right, it is tough to do, but people that do it right now, I think, will be rewarded for it.
Yeah. Similar to how we talked about at the beginning, how real estate's painted with a brush. I even get caught up sometime, and it's so global now where you're reading news, and in the States, their debt was so different. And a lot of the multifamily guys I know are having to buy down debt because it's, they took interest or floating variable rate loans or interest only for 2 years and try to get that out. And I think there's gonna be a lot of pain there. And on the buy side, I wish we'd seen some of that here, as long as it wasn't me, but I don't know if we will. So one thing maybe we should have touched on at the beginning is, what is the actual definition of industrial real estate? Is it, a big Amazon building? Is it a welding shop? Just for people who don't know.
Yeah, great question. And the short answer is it's all of that. So I like to break industrial real estate into three categories: warehousing, manufacturing, and flex. So warehousing is probably the most familiar element right now that people are familiar with. And that is the Amazon fulfillment centers, distribution centers. I would say warehouses are buildings where things are stored and can be stored for hours, like an Amazon building, or it can be stored for several months, if not several years. But just think racks of storage, things being delivered to the building, stored for some period of time, and then they get sent out. And a good example is actually a Home Depot. And everybody's been in a Home Depot, and probably if you ever look up, it's really just a giant warehouse with racks and racks of product. Instead of storage, it's just racks and racks of product. And it's in a retail location by design, but it really is just a big warehouse property. The other one is manufacturing properties, and these are buildings where things are made. Example, I'd like to use the Boeing facility just outside of Seattle, 4 million square foot building, 90-foot ceilings. It's the largest building by volume in the world, actually. But raw materials come into it, all the things that are required to make an airplane. It's assembled, manufactured, all put together. Final product is the airplane gets sent out. And these buildings can be as small as 1,000 square feet for a really small manufacturing facility that makes microphones, as an example, all the way up to the Boeing factory, of the largest building in the world by volume, whole spectrum. The last category is flex properties, and these are buildings zoned industrial, but are used for purposes other than warehousing or manufacturing. And a building that I own is a flex property, which is a good example. So the tenants we have in there, one tenant that's a straight office user, so 100% office. We have another tenant that is an equestrian store, so they sell stuff for horse riding. We have a hot tub distributor in there, so showroom and warehousing for their hot tubs. Then we have a flower store, which is crazy to think you'd have a flower shop in an industrial building. And then we also just put in a furniture store. And we have a cabinet store in there as well. So kind of a wide mix of tenants that are in there, but that's an industrial building, flex industrial property that can handle a wide array of different types of tenants.
Yeah. Have you ever had a tenant ask, I know I think West End Mall does this, but where they want cheaper rent and then you take like a small percent of the revenue or something like that? Have you ever entertained that?
I haven't personally. I don't know if many people would do it on this side, from the standpoint that they probably just like keeping a separation in there, so they don't necessarily want to be invested in the tenant. I haven't heard of it, at least, but there's probably some creative operators out there that are willing to try it.
Yeah. Thought maybe you get free hot tub once a year or something, and some flowers. The ladies would love that. Love that idea.
Well, it's funny. I use the flower shop actually quite often myself, and so do other people. So yeah, it's interesting on that. Maybe I should talk to those guys about a hot tub deal for Contra.
There you go. So if someone wants, if they like the idea of it, or they've kind of heard about it, they want to diversify, where do you start with industrial?
Yeah, another great question. And what I would actually say, and this might sound a little baffling at the start, but I'd actually say most people should avoid industrial real estate. And we'll get into some of the reasons on why industrial real estate is good. And I've got the vast majority of my net worth directly in industrial real estate, so I'm a big believer in it. But I think that there's also a very steep learning curve for someone to decide that industrial real estate is appealing, they want to get into it. It's not the same as perhaps a residential real estate investor who says, okay, well, I'm actually going to increase my portfolio. I'm going to do multifamily. There's a lot that needs to be learned, but it's not a huge leap. If someone already owns 10 houses, it's not a huge leap to go and buy a 20-unit apartment building. Still takes time. Don't want to discount that, but it's not as big of a leap as someone that owns residential real estate to all of a sudden consider going to industrial. There's a lot that needs to be learned in terms of what makes an industrial property attractive to tenants. What happens if that stuff isn't there? Like what happens if the building has short ceilings, or if there isn't enough loading area at the back, or there isn't enough power? What happens in those situations? So someone's got to really go and commit to learning everything about industrial real estate, what makes a good building, what makes a bad building, and then they also just have to study the market. So that can take time because we don't have the same ability to access information as you do in the residential side. You and I have talked about it before. If you wanted to figure out what a 2-bedroom apartment is renting for in a neighborhood, you could access that information pretty quickly. We don't have that same robust amount of data, so it takes a lot more time to figure that out. So what I would say, if someone is interested into it, commit that it's going to be a 1 to 2 year process to really become an expert in what industrial real estate is, what are the demand drivers, what are you looking for in a property, and then also studying the market. And a lot of people want to buy something right now. They just say, well, I've got this money, I want to make an investment right now. For that, I would say that in the industrial side anyways, that could be dumb money, because you're going up against some people that know the industry very, very well, and they're very sophisticated. I would say don't be dumb money, and invest that time. Be patient, be willing to spend a year, 2, 3 years being very comfortable, understanding the market and knowing that you're just going to make a wise investment decision.
Yep, makes sense. That's where too, I think like someone like you who has a podcast about just this, that you can get a pretty good knowledge base just listening to that, reading books. And I always find, I'm biased this way because we run a real estate fund, obviously, but with like so many people just they read something or hear it, or they want to diversify and they want to jump in and do it. And I always think, you're probably better off investing with someone like you who already does it. I don't know if you even take investors, but like if they could come in on a deal with you, still get all the benefits of it, they'd get the experience, they'd have someone who actually isn't the dumb money, who's doing all the right things, and get your foot in that way. Like we had a guy, come in our fund right at the beginning, loved it, he's seen all the properties, everything, and now, he bought a building on his own, and he's going to do that as well. And it's like, you kind of can get your foot in the door, I think, leveraging other people's knowledge, for sure, if you're not going to be full-time doing it, because you're going to be competing against people who are.
Well said. And I'm not raising money. In every project that I've done, I have my own capital into it. And few properties, it's just one other investor and myself. And then we have some closer friends and family in it, but I haven't raised money in a GP-LP model. I agree with your point on that. And I think that actually is probably the natural spot to get into industrial, is to either partner with somebody that has done it already so you can piggyback on their knowledge and their expertise, or invest in a real estate investment trust so you can follow along with their reports, follow along with their quarterly meetings and their updates, so you can just get a better sense of what's going on, or invest in a GP-LP model. There's some great operators out there it is that smart money. So if you can invest as passively as an LP in there, I think that is a great spot to do it. And just the same example of one of your LPs in there, who he gained enough confidence to go and do it on his own. I don't think he would have done the same thing if he wouldn't have actually got exposure to it and how to run it had he not invested with you. So I think that is actually a natural spot to get into it, is to piggyback on someone else's knowledge and expertise before trying to do it all on your own.
Yeah. Yeah, I think the biggest thing people probably that holds them back is just, it's almost like ego. It's like they want to say they own 100% of that. And I always tell people, like, well, would you rather drive by a bunch of really nice buildings with scale and you're still an owner of it. You could say like you're still a part owner, that, or drive by like, one crappy building that's probably not performing, but you own 100% of it. The downside is you're also on the hook if things go bad. And so I think there's an ego component for some people that they just want to own it themselves. And I don't know if that always works out good. Why don't we get into kind of a debate things? We'll say what we like about each industrial and multifamily. And like I said, I like them both. I don't know enough about industrial, but even when I go to like the real estate forum, that's kind of like, as you mentioned, I think, but for a couple of years now, seems like it's like a sexy asset class. It's, there's multifamily and industrial. Not a lot of people talking about retail and office, and maybe it's because all the money needs to leave those that it's going into these two. But I think they're two pretty good ones. So I'd say that the one thing for me that's really attractive about multifamily is the access to capital. So we can get, you can get ridiculous loans, 5% down, 50-year amortizations. They're generally pretty willing to lend on it. So it does make it easier to finance. I don't know what the counterpoint to that is on your side. I've always just been worried about doing anything else because you might have to put in all that extra equity.
I think that is a huge upside on residential and multifamily, is that loan ability. I think as an investor, and even to the point you made about ego, I think ego can be very destructive when it comes to investing. When I try to remove myself from that and really just focus on yield, at the end of the day, that's what we want, right? If you were to take all of your investments and extrapolate that out 50 years and then look back on it, what you owned was really a vehicle to get you there, but there really shouldn't be emotional attachments, or there shouldn't be an ego to it. You're really just chasing yield. And what I like about industrial is, for all the reasons that I mentioned of it being difficult to get into, is that you can exploit those asymmetries. So if somebody does become an expert in that and they really understand what's driving demand, and they can see weaknesses, or they can see areas in the market that haven't been discovered from other people, it's almost like insider information, that you have access to information, you have access to knowledge that isn't publicly out there. Whereas on the multifamily side, I think that there's so many people in that space for the reasons that you mentioned. It's attractive, it's easy to get into, there's so much capital chasing it on the private side as well as on the lending side and on the government support side, that there's not a whole lot of area to find those weaknesses. It's all been baked in. It's almost like the efficient model theory within stocks, where everything's already assumed to be known in the market. It's not the case in industrial, because it's almost behind the scenes. So that's what I like about industrial from that standpoint, is because there's barriers to entry to get into it, there's just not as much competition chasing it. And when I try to factor that in, if I can make a little bit extra on my returns as a result of it, at the end of the day, I really don't care whether I was investing in multifamily or industrial. I just want yield. So that's kind of the driving factor, and I just think I can make a better yield in industrial.
What percent of owners would you say in industrial are like REITs or big?
It's becoming a lot more institutionalized. So just to give a figure on this, because it's an interesting stat, in the US, which is where the US has a lot more data available, which actually goes to show in Canada, even in the US, they don't have a lot, but in Canada, we have very limited. But I do have some stats on the US market, which kind of paint a picture of this. So there's about 21.5 billion square feet worth of industrial space in the US, like a staggering amount. Largest asset class by size, by country mile. Lots of inventory. The largest owner of industrial real estate is a company called Prologis. It's a real estate investment trust. They own 1.2 billion square feet all over the world. But let's even just assume that was concentrated just in the US. The biggest industrial owner only owns 5% of the market at like the high side. So there is a lot more institutional attraction, and I think that's actually one of the areas of opportunity for industrial, is to amalgamate and consolidate these into larger groups. Whereas right now there's a lot of buildings owned by guys like me, small investors. A lot of companies own their own industrial real estate. That's not common in retail or office. There are a lot of companies that do own their own. So it's fragmented. It's very fragmented compared to other areas where, and I don't know what's multifamily like. Is that Boardwalks and Midwest is a lot owned by that, or is it guys like you as well?
Yeah, it's a bit of both. I think it depends on the size. So now the stuff we're buying, if you're 100 plus units, nicer area, it's basically, maybe there's 10 people that in the city that are kind of buying that. It's or for sure when you get bigger, like the next deal we're looking at probably 200 units. There's just but that's a bigger dollar amount as well. So that gets a lot less. I think on the smaller stuff, you're not, Main Street is definitely an exception where they buy pretty much anything anywhere, and for a long time Avenue did. But I think you'll start to see less and less where those guys aren't buying 10 and 20 unit buildings, and that's still a huge percent of what makes up the market here. Yep. So I think but yeah, there's a couple big guys that control a pretty big portion of it, and it's all the bigger stuff. So the one thing about multifamily, another thing that I always really like, and I know there's downside to this too, but in real time we can adjust. So like now we're having ridiculous rent growth, and we tenants are only on 1 year leases. Almost always we do have some that are 2, but generally 1. So every month 8% of those leases are coming up. Mm-hmm. So if the market's running hot, you can increase rents literally monthly. And in Alberta, there's no cap on that. We don't have any kind of rent control. So you can take advantage of that. And then on the downside, like when we first started our company, it was COVID, and like the panic, the fear was no one has money. Everyone moves. And you can also adjust for that. You can throw an incentive in there and just make sure that those tenants stay, during the bad times. If you have to lower the income a little bit and not lose that tenant, and then when the good times come, you can raise it. And it's kind of in real time. I say it's kind of like a utility. You can just fluctuate the price as the demand is and take advantage of some of the highs as opposed to being locked in. So I don't know what would be the counterpoint for.
Yeah, and that is a perk. I think that is a huge perk and a reason to consider multifamily. That's the perk. But anytime there's a perk, there's also some trade-off. And the trade-off in that case is that you don't have stability on your tenants. If you're always trying to raise rents by attrition, you're going to be turning over some tenants that don't want to pay that rent increase. And you have got to find new tenants, and you got to give them some incentive to get in there or some reason to get in there. And you're turning over spaces. So you might have to do a little bit of cosmetic work or whatever it takes. And what I would highlight on that is that all takes somebody to do it. And well, you compare it to one industrial building that I own. It's a fairly good sized property in the outer limits. We have one tenant in there. It's a Fortune 1000 tenant that's on a long-term lease. And it'd be the equivalent of probably a 15, 20 unit apartment building in terms of value. And I've been to that building once in the last 2 years, and it's very easy to manage that property. So compare that to a 15, 20 unit building where you do have that ability to raise rents and ebb and flow with the market. That takes a lot of time and takes a lot of effort to do it. That's very management intensive. You can't just do that on autopilot like I can on this industrial building. And then I would also say that when the market's going up, that's great. But the opposite of that can also occur, where if we do go into some sort of recession or economic downturn, like everybody's speculating that we will, then you've got the reverse. Then you could potentially have to lower your rents to keep tenants or to attract new ones. Whereas I've got it locked in. I've got a long-term lease with these guys. So in the regards to market moving up and down, it's a gift, and it can also be a curse. So I think it's a perk. I wouldn't discount that right now. That it's a perk in a rising market where you've got infrastructure in place and you've got management in place. But take a guy like myself, who I've got a day-to-day job, I've got family responsibilities, I've got everything going. I can't go and personally manage a 15, 20 unit apartment building the same way that I could manage this one large industrial building, which I've been to once in the last 2 years. So that's perk, but there's also a trade-off.
Yeah. Have you ever had to, what happens if a business is in a bay and they go under or whatever, and they still have 5 years left on the lease? Are they still liable for that, and you're going after them, or how does that look?
It does happen, but it's not as common. And I think on the residential side, it probably happens a lot more often. I'm speculating on that. I have owned some I owned a fourplex a number of years ago, so I've had a little bit of exposure to it, but not nearly at your level. So correct me if I'm wrong. But I think that the residential side, there's probably more turnover where that happens. A point that I can make why I really like industrial is you're dealing with corporations for the most part. So you're dealing with companies where you can analyze their financial statements. You can see how much money they've earned, what their expenses are, where they're allocating their money. You can see if they've kept money as retained earnings. You get a really full understanding of their financial picture and see if they have the money to pay the bills. So from that standpoint, you can just give yourself some more comfort knowing that they have the ability to do it. That said, it does happen. There are companies that just go out of business. Their revenue dries up, or they lose a contract and they just can't pay the rent. So that does happen. Quite often in those scenarios, it's a pretty quick process. We're not constrained by the Residential Tenancy Act, so we don't have to go through the whole eviction process. And on that side, the government really does put a huge favor on the tenant side. We're not beholden by that. For the most part, our leases just follow basic contract law. So whatever the lease stipulates is what's going to be enforced. So an eviction process is typically a lot easier to work through. Most often the companies will just leave. They'll just do a midnight move, and you're faced with, now you have a vacancy that you have to fill, which could actually be a negative. And we could talk about that on the industrial side too. But it's rare. Even going through the pandemic, I think we had 20 tenants going through the pandemic. We had 2 that we had to defer their rent on to just let them get caught up a little bit. and they got caught up very short order, and we didn't lose a single tenant, nor did we have a single month of missed rent during that. And then we also didn't have the eviction moratorium that I think is a detriment, and that's always a risk in the residential side, is if the government decides that they just want to make evictions illegal for some period of time, that can be hugely devastating to a residential owner. So for the most part, we don't have those same issues of getting people out. It's a lot quicker to get people out, to turn it over, dealing with it's just a lot easier of a process. So I'd say 1 point industrial.
Yeah. Well, I'll add on. I mean, the one thing I was going to say too is on the tenant side, yeah, you're definitely we're dealing with the general public. And now that we've done it long enough, we do have so many, checks that we do that we get a lot less of the eviction. But I mean, I've been assaulted by tenants. I've had the window smashed out of my truck. I mean, we found, I don't know how many dead bodies. I doubt you're dealing with that, that in industrial. The upside is that you are dealing with the general public. I guess that, there's in a recession for sure, we're in that mid-level rent. So almost nothing can happen that there won't be a demand for $1,000 rents or $1,200 rents, even if the government has to pay it. So I think that's one thing that always gives us some solace or comfort. But
you have a lot more stories too.
Yeah.
You have better stories to tell.
Yeah.
Mine are pretty boring. I went out to a building and I talked to the VP of the company, and they asked them if there's any problems, and they said no, and then I left. That's my good story.
Yeah.
Compared to the ones that you have. You could. That's why your podcast is going to be so successful.
Yeah, I always thought one of the guy who's been with us the longest in the management company, we've always talked about doing a segment that's call it like landlord nightmares or something. But yeah, it's there's so many, and you deal with so regularly that you just tend to forget. Like there were some tenants that we could have wrote a whole book on the thing, and now you barely remember who they are because it goes through much. And it's cool to see. It's cool to deal with the public that way too. And you have the good stories where you can benefit people's lives as well. One thing I like about multifamily, or that really attracted me to it in the beginning, was we were in mobile home parks originally, and that's a hard business to scale. I think multifamily, it's kind of copy and paste, and you can almost go to any city in North America, and there's not gonna be a huge difference. It's gonna be like maybe the rents are down a little bit, maybe this area is a little nicer, and there's definitely an advantage to being local, but there's no cap on it. Like you can scale to 10,000 or 50,000 units, and companies do all the time, and have started somewhat small. Like you didn't need to start with the big fund. I don't know on industrial if you had endless capital, if you can. Is there tons of opportunity out there? Or is it?
It's a great point, and I don't know if I would argue in favor of industrial having an advantage or a disadvantage in there. Speaking for myself, everything that I own is within like 20 minutes of where we're sitting right now. So I know this market very well. I consider myself to be an expert in this market. I lose that advantage if I start going to another market. So if I decided I want to go to the States, which is appealing to me, I'd love to invest in a market like Dallas or somewhere in Texas or somewhere in Florida. That's very appealing to me. I'm not an expert in those markets. So there's opportunities, but I lose that one thing that I think gives me competitive advantage. So locally, yes, I think it's actually easier to scale locally than in industrial than it is in multifamily, for the standpoint that management is so less intensive. So you're a sophisticated operator. You've already got these systems in place. You going and adding another building isn't going to be a whole lot of work in Edmonton. But if there's an investor out there, the one gentleman who just bought his own building, one of your investors, for him to go and add another building, that's a considerable endeavor, because he probably needs to actually start onboarding management in that place. He probably needs to have a maintenance guy circulating all the time. That's a lot of work to go from, I don't know what he owns, but call it he owns a 20 unit building. For him to go from 20 to 40, that's a quantum leap in terms of what's required to run that. Whereas for me to take one $3 million building where I've got one tenant in there and add another building that's the very same, that's like minimal amount of extra work that I have to do. So I think it's a lot easier to scale industrial in my local market versus I think it's actually be challenging to scale it, because then all of a sudden I need systems in place in multiple markets. If I want to go and add a property in Dallas, I need to scale up the same way that that investor would have to scale up locally. So I think that this is just as I'm thinking through this, I think it's easier to scale industrial in one market, but I think it's easier to scale multifamily in multiple markets.
Yeah, makes sense. I think a lot of people too do get lost in even like people I know, they'll see what we do and they're like, it's easy, we'll do this. And like you said, when you get to a certain level, it's like, how do they expect to compete? Because just, when we started the company, we front loaded, we spent way more than we on certain, on our platform or all this stuff that to come in and only have 20 or 40 units, you couldn't spend the fee that we pay to use our app, a month, because it just wouldn't make sense. Or you couldn't, any of the one little things. We have an advertising budget that we spend on Google Ads. Well, you couldn't do that if you had one building. So you're not going to get the quality of tenants we get. And I think that's where there's a big advantage in having, scale, or at least planning to go to scale. But yeah, that's what I was kind of curious on the scalability. Could you double with the same amount of staff you have, I assume?
Easily.
Yeah.
Easily. Yeah. Well, I shouldn't say easily. We do have some properties, but we have professional property managers on them. So some we self-manage, and they're very easy to do comparatively to something that would be like a 30-unit multifamily anyways. So some of it we could scale very easily with no additional work. And even if we did, we could just add out of house. What am I looking for? What word am I looking for in there?
Outhouse.
Outhouse. Off-site property managers, I guess is what I'm looking for there. They'll come to me when I'm driving later, but okay. couldn't get that one right. But we could always just hire property managers. Outsource, there you go. Yeah, I don't know, I was struggling on that one so much. We could outsource the property management and scale. So, and that's actually one thing that I think industrial lends itself very well to for people that are willing to commit to learning and becoming experts in it, is that one-off investor. So call it a doctor that, for whatever reason, the doctor has a lot of money, but he doesn't want to be an LP. He wants to own it. Maybe it's that ego thing again, where he wants to own the property. Consider owning one industrial property that has a Fortune 1000 tenant in there that pays the rent by direct deposit, and you never have to deal with it. Or would you rather own a 15-unit apartment building? And I could tell you how much more it's going to take to run that 15-unit apartment building versus running one building that's industrial. So from some investors will look at it that way. I'm a yield-driven investor. That's how I look at it. I could easily invest in your fund if it's paying a good yield. It makes no difference to me. I'm just chasing a return. There's some investors out there that like the control, or they like the ego, or they like to brag to their friends that building that I own down there, I own that building. For whatever reason they decide to do it, it'd be much easier to manage a single tenant industrial building than a multi-tenant or multifamily building.
Yeah. One thing with multifamily, man, I don't know if it's a pro, or I guess it would be, but because we do run the syndication, so right from the beginning, we bought the first couple ourselves, but the idea was, hey, we're going to raise capital and grow this thing. I think the market for the retail investor is kind of there too. Like a lot of people understand it. It's like, hey, I pay rent in my house. I understand what this looks like. Or where it might be a little trickier. Like even myself, I know a little bit of industrial, very little, and I'm in real estate.
Mm-hmm.
I think it might be harder. Well, maybe I'm wrong on that, but to attract capital, if you went to raise, would to find a sophisticated enough LP or investor that they're understanding.
Yeah, I would agree with you. I completely agree with that. Is that and rightfully so. Like I think most people should just stick to something they're familiar with instead of going out there and running the risk of being that dumb money. I think it's just a much better play for the majority of people, where there could just be upside on the industrial side, and it comes with a corresponding amount of risk too, is that if you can find a building that was overlooked for some reason by the rest of the market, and that could just be because there's less people looking at it, or it could be there's an opportunity that comes up, you do just have the opportunity to exploit those weaknesses and perhaps earn larger returns. But it's a pendulum. I always look at returns and real estate in general as a pendulum. So if there's a 10% risk, there should be a corresponding amount of upside. If there's a 30% risk, then there should be a larger upside. It's that constant pendulum. And I think multifamily kind of works within a tighter operating band there, where there's some amount of risk and there's certainly some upside, whereas industrial, there can be more risk, more upside. the stupidest thing I think someone can do is take on a higher amount of risk without that corresponding amount of upside. So someone might take a 40% risk, but a 10% upside. To me, that's just completely illogical. So I think that that's where the trade-off is that yes, there's more people should consider multifamily, but being open to opportunities on the industrial side, so long as you can commit to understanding it, I just think there's higher upside, easier management, easier ability to scale locally. That's kind of the summary on why I like industrial. But again, I'm the antithesis of saying that industrial is the best asset class, because I think for most people it isn't. It should actually be avoided by most people.
Yeah. Well, I was going to ask you if you had like a minute to sell someone if you wanted to bring. But I guess maybe you'd be telling them not to do it.
I wouldn't. I would say you probably shouldn't.
But let's say they were like, hey, you met them, they've got a bunch of liquid cash, or like we want to invest it with you, and you want to buy a bigger property. Would that have kind of been the pitch, or what would be like if you had kind of like the elevator pitch? What's the big couple selling?
What I would say is that if anyone's considering industrial, it's consider case by case basis. So don't just commit to industrial and say, this is what I'm going to go after, and this is what I'm really like for maybe the reasons that I mentioned on why it's attractive to me. Perhaps someone is saying, well, this is for me. Maybe it is, but I would still look on it on a case by case basis. So maybe there's an opportunity to be a capital partner on a specific building that comes up. So someone like myself finds an opportunity, and I don't have the money to self-fund the whole thing. That could be a good opportunity. So here's the operator puts together a plan. Here's what we're buying. Here's all the areas. Here's our downside risks. So that's identified, but here's the potential on this. And it looks attractive. And the person had comfort, not just in the property, but in the operator. That's probably something that's worth considering. I still think that even if that was the case, you still want to have a really good understanding of what industrial real estate is, and you still want to have a really good understanding of the market, because otherwise you're putting your faith primarily in the operator. And I make mistakes. What's to say I don't make a mistake on that property as well? So even then, I still think having a good amount of knowledge is healthy, and not necessarily just committing to it. Like, I still think multifamily is a great investment vehicle. And you and I talked about this a couple of weeks ago. I think there's a long runway for that. I would personally invest as an LP in something like that. I don't want to do a project like that on my own. So I like multifamily, and I would say for an investor, look at it on a case-by-case basis. Look at it for opportunities. If a property did come along and it looked great and you could be the capital partner and you had some comfort on it that what's the person's buying and who their operator is, that could be a good opportunity. But I wouldn't recommend to anybody committing that they're just all of a sudden going to shift their entire investment strategy and just go to an industrial. There are people that do. Like I said, I've got vast majority of my net worth right in industrial real estate. So I have taken that strategy, but I've been working in this industry for 18 years. So I know it very well. There are people that will convert to just doing industrial, but for the person just starting out, I would dip the figurative toe into the pool and then see how it goes. But the foundation has got to be knowing that market really well and knowing what industrial real estate is really well before committing a single dollar.
Yeah. Yeah, and I think that's where it's a little tougher. Like for multifamily, we can look at certain trends. Like I can just say, look, here's our immigration target. Here's our home building target. There's no way there's not massive pressure on the system. And I guess industrial is maybe a little tougher that way, where it is hard to know. In Alberta, you probably have a pretty good finger on it, but we don't know exactly what the economy is going to do in the next little bit. I know people are going to need a place to live, but maybe businesses do get hurt. I guess we don't know.
It's a guess to some extent, right? Yeah. I kind of look at the trend line of the market, the economy as a whole always sort of trends up, but there could be volatility at any point. Look at 2008, 2009. That was a disruption of biblical proportions, and now nobody saw that coming, or very few people saw that coming. So there's always going to be those blips, and I think that's where you need to be a very good operator to be able to work through those, so you don't get stung by it, and an incident like that doesn't bankrupt your whole portfolio.
Yeah. So one thing before I wanted to touch on a little bit was you obviously have a a pretty good sized YouTube channel and a podcast and stuff. What was the thought process when you started that? Or
Yeah, so that was 2020, right in as the pandemic started. And I don't know what it was like for you, but that first month was super quiet. There just wasn't much activity. I think that was March or April of 2020. And it was just really quiet. And I'm one of those guys that can't sit still. I'd never be a guy that can just go and retire on a beach because I'd drive myself crazy. I just always want to be doing something. And when it was really slow, I thought, well, this could be a good opportunity to try and just create some more content. And so I started getting the wheels in motion and just drawing on my experiences being a broker, being an investor. My whole idea was try and throw out as much value as I can out there with no real agenda other than who knows what you can do if you can create an audience. So I thought I could commit to this for a while, just share some of my experiences, share what I've learned along the way, share some of the screw ups that I've had as well, and see if anybody's interested in it. That wasn't available when I started. There's very few people talking about industrial real estate back then, and there still is very few people now. So I kind of saw an opportunity to be a bit of a voice in the industry, a very selfless endeavor where I don't talk about where I live. So I try to keep like a very almost global perspective, definitely a North American perspective. I don't talk about where I live. I don't talk what company I work for. I try to have it be a standalone product of just delivering value. And my idea was, again, grow an audience and see what happens. And I've actually now done over 300 videos, which is crazy to think about just the amount that I've talked into a microphone, into a camera. But a lot of that's interviews. So on the podcast, I think I've done well over 100 episodes on that now, and just experimented with some medium form content, some short form content. And it's just kind of the point where it's fun. Like I actually really enjoy doing it. I've got to meet really cool people all over the world. A lot of people will reach out to me and just ask me questions about where they should work or how they find a job in brokerage or how they should invest. And I've been able to help probably a half dozen or 10 different people find jobs all across North America just through my own network and helping them connect the dots. So that's cool. It's fun. I get hang out with guys like you and that with very similar mindsets. I think we follow a lot of the same people. I think we have like very similar ideas. That's the majority of people that I get to talk to. It's just like great people all over the world. So I look at it now that it's gone from being something that I thought could just be something cool to do. I just love doing it. Like I every time I do a podcast interview, I'll either click off or in this case, maybe we'll shove the mics. I'm excited about it. Like I get fired up after it. So it's a hobby now, and I've been able to grow like a decent community on it. And for the foreseeable future, is just keep going at it.
was it when you initially started? Was it hard for you to get in front of a camera or a mic, or was that never an issue?
It definitely was. Like it's not comfortable because it's very weird. Like we have the camera there, and we'll break the fourth wall if that's what we're doing. It's weird looking at a camera and talking to it. I did Toastmasters for a number of years when I was younger, and that gave me confidence to speak in front of groups. So I can speak in front of groups with relatively ease. Still get nervous, and that's the thing that I'd stress is to anyone that is thinking about doing it. You should be nervous, like whether you're speaking in front of 5 people, speaking in front of 5,000 people, or speaking in a bedroom into a camera, there should be some nerves there. And that's a good thing. That means you're actually getting excited about it as opposed to just delivering deadpan speech on it. So definitely I was very uncomfortable, but having done it 300 times now and the countless amount of hours that I've stared into a camera, it's a lot easier now where I can turn the camera on, I can speak to it no differently, but that takes time. Like anything, it's a muscle that you're developing and stretching.
Yeah. Well, I didn't know you filmed in your bedroom. I think I've been following the wrong channel.
Well, I've got an OnlyFans as well. That's how I pay the bills.
That's where the money's from, yeah.
I don't have an OnlyFans if my wife is watching this.
No, that's good. I think it's scary. For me, it was a hard thing too, because just the way I was brought up, and we didn't even have cameras and stuff. So that transition or to getting it, even still, I think it's a little bit where some guys are pretty comfortable just throwing up a live and videoing himself driving or whatever, I always like have to look over. I want to make sure the content's good, and probably that's not the correct way to do it. But
well, one thing that I would also add on to that is that most people don't care. Like the audience, they don't care. We're much harder on ourselves than the audience is. And I say stupid things all the time. I've got like a 1 to 10 ratio. I want to say 10 somewhat intelligent things, or at least not stupid things, to every dumb thing that I say. And as long as I keep that like 10 to 1 ratio intact, I think it's okay. And most people, they just glaze over it, because even Joe Rogan, like, who's the best podcast host I've seen, he'll say dumb things, and I'm sure he said things afterwards. He's like, "Oh, that was really dumb," because it's impossible for someone to talk that much or to do things like this and not have the odd mess up. I think that's what actually makes it more compelling, is that it's not a movie. You're not watching an actor that rehearsed their lines and perhaps delivered it 35 different takes before they found that one that they wanted. It's human. Like you and I having this conversation right now. It's not scripted. It's actually just us chatting. I think it's a lot easier to take that in. And that's where I think also the media and entertainment world is headed, where they want to see actual conversations, and none of us are perfect. We're all going to make mistakes. And I think just accepting that and then trying to just get a little bit better as you're getting in front of camera makes a big difference as well. But I think people are fine, if not embrace the odd mistake.
So when you initially started the whole social media podcast, why did you decide to make it like a personal brand instead of something to benefit your company? And I guess secondly, like, would you recommend that to people going that route?
It's funny, and it's probably similar answer to what I would say to people investing in or considering investing in industrial real estate, is to not do what I'm doing, because I don't talk about where I work. I don't talk about what city I live in. People can always tell the Canadian accent. We might not all know it, but we all have thick Canadian accents to people in the US. So people can tell that I'm in Canada, but I don't mention what city. I don't mention what company I work for. So I set it up with the idea of it being a standalone product, and I didn't want it to have a corporate feel. And I think you and I were talking before, is that there's definitely a reason to have that. And from a business development standpoint, there needs to be a corporate feel if that's what the intent is. But I know when I'm looking at something that's corporate driven, because it feels like a commercial. It feels like that's the whole reason that it's there, is to drive traffic. And I guess I subscribe literally to the Alex Hormozy's idea, or some of these guys that are just creating content for the purpose of delivering value. And it's hard to deliver value. And I guess I define value as either something that's entertaining or something that's educational. I try to do a little bit of both when I can. But that's value to me, is if somebody actually comes and they learn something, or they're entertained, or they find it funny, or they make fun of me for the stupid things that I say. That's value to me. And it's hard to split those. It's hard to split value from a corporate driven mandate of that content. So that's how I approach it. But I don't develop business from this. Aside from people reaching out to me and seeing if I can help them find a job in the career, or someone reaching out to see if I can give them my advice on an investment, I'm not driving business from this. But that wasn't the intent. I don't necessarily need to have someone reach out to me and want to buy something that I'm selling. I don't have anything to sell. I literally have nothing to even offer. And I don't mention how they can even work with me. So again, it kind of circles back to the whole idea that I had, is I'd love to just build a community around this and then see what options are out there after I do it. So some people will say, let's just start a YouTube channel or start a LinkedIn account and we're going to get business from it. And I think that that's fine. And then try to grow an audience after the fact. I'm kind of reversing it. I want to grow an audience first. I want to grow a community where I think that I can help people out, and then see what happens down the road. I don't know what I could do with having a community at some point down the road. Could I do a course? Could I write a book? Could I perhaps syndicate a deal and try to raise money? I think that those are all options at some point down the road, but I don't really have a goal. I remember that Batman movie when the Joker's like, I'm like a dog chasing a car. I don't even know what it'll do if I catch the car. That's me. I don't even know what I'll do if down the road. I enjoy doing it. It's something that I really like doing. It's a hobby. It's a passion. If I never sell anything as a result of it, that's fine by me too.
What for your portfolio? What would 10 years look like for you? Like, do you have a goal?
I probably have as much invested in this market as I want to. So I don't know if I want more exposure to this. Not only am I mostly invested in industrial, it's all here. So I'm not diversified at all. So I've probably hit the limit on how much I want to invest here. I am attracted to the US markets. So like I like Texas, I like Florida. I can see spending some more time just getting to know those markets and to try and limit that weakness that I have of not being an expert in those markets. I'd like to study those markets more and perhaps invest in a market like Dallas or somewhere in Florida. That to me is probably the next move. But in terms of where I have my exposure right now, I don't see that changing. I don't see adding more properties in this market.
Yeah. For us, our long-term plan, we pretty much, if you want to grow, you got to get to the States. The market's the biggest apartment market in the world down there. Well, we'll wrap it up, but is there anything, we'll put your links and everything in there. Is there somewhere specifically that you're on more if people want to follow you or connect with you, or what?
Probably YouTube and Twitter right now. And Twitter is a great one. And I've got to talk to you about that after to get you on there, because there's a pretty big real estate community on Twitter right now. And there's just a lot of people sharing cool ideas. So that's one that I've been onto. So we'll get you onto that. But yeah, YouTube and Twitter are probably the best ones.
Well, yeah, everyone go follow them. We'll put all your links and everything in the bio. I've been on your channel quite a bit. There's great like informational stuff. Like you said, you're not pushing an agenda. You're just kind of giving people information. And so yeah, thanks a lot for coming on.
Appreciate it, Shane. Great chatting with you again.
Thanks a lot for listening. If you guys do have any questions, feel free to send them our way and we'll answer them on one of the upcoming episodes. It definitely helps us out a lot if you guys can rate the episode, go write a comment. Goes a long ways as far as getting us out to new people. So that'd be much appreciated.